Hello, this is the tradesight stock market preview and U.S. economic data roadmap for the week beginning Monday, June 17th, 2013, ending Friday the 21st, which will be triple expiration. We'll talk about that here in a few minutes. Let's focus on the really important point of what's happened technically here in the market over the last week or two, which is the S&P. We've been tracking this for so long, we hate to hammer it, but you got to be focused on this stuff because it leads to good opportunities. The S&P has finally, after two false attempts to break and then hold under the line, one here and one here, we have finally broken under the line on Tuesday and closed below it. Wednesday we accelerated to the downside late in the day, selling off a bit. That's your confirmed break of the line. Thursday turned up and rallied on very, very light volume for the because of the futures contract roll, the quarterly contract roll. That took us right back to the retest of the line. And Friday we sort of stalled out. So now, any confirmed rollover here, basically taking out these lows at 1600. That should be it. The trend line is officially broken finally, and the first part of the selling is often some of the strongest after that's confirmed. So let's just be very aware of that. Let's also be aware of the fact that with triple expiration this week, there's going to be a lot less protection out there for the markets, for stocks and futures in general, over next weekend. So if we do get kind of a decent sell-off this week, then there's not. That's the type of stuff that leads to accelerations to the downside. Most crashes, and not that I'm saying there's going to be a crash here, but most crashes occur on the Friday of options expiration or the Monday after. That's an interesting point. But if you go back and look at 1987, 1929, some of the stuff in 2001, it occurs right on those dates because there's just not protection for the market. When a lot of people have puts and calls out there, the market doesn't have the ability to move as much. So something to keep in mind. Definitely getting finally almost the confirmed signal for the first time in 7 months. We've been watching for this. And the NDX, I should point out, also had that big outside day down at the top on heavy volume. And then we got basically a 13 sell signal right here. These are starred because we didn't close above the 8, so we got the qualifier. But if you turn the qualifier off, we got the sell signal right here, and here's the roll. Not as much of an uptrend on the NDX, of course, because of Apple, but nevertheless, definitely an area to be aware of. And let's take a look now at the stocks, the semiconductors. You're going to see this area is going to be support. If they can break that, you get a problem. And then next up, the biotechs as well. Okay, already starting to look lower, and you can imagine in your head a trend line right here that's now broken and confirmed. So this is starting to paint that picture finally. Not that that's a bad thing. It's a good thing for us. We can make money on the short side sometimes more easily than we make money on the long side, as stocks tend to fall faster than they rise. So it'll be really interesting to see how all of this plays out. Here's the I'm going to put up the ES. Now remember, we rolled the contracts from the June contract, which is this right here, to the September contract, which is this right here, this last week. And so here's a 15-minute bar to show you the whole week on the ES. And it's funny, we've been talking so much in the room about this 1625 TriStar level that the market is basically glued to. And in the process of creating this trend line break I just showed you, and then confirming it, retesting it, and now starting to roll over, we have played all over this 1625, almost closed there basically on Friday. Remember, these last three bars are actually post-market. So the stock market closed, it was actually 1622.50, and we had just hit that number on that last bar. Pretty amazing how important those levels are. In terms of ranges this week, you had about 35, 40 pips of range here on the ES, and on the NQ, we'll give it about 90 pips of range, 90 points of range. And keep in mind that we did have the contract roll, so the volume was really light on Thursday and even worse on Friday. So what do we see for the week ahead? I see a couple things. First of all, with this contract roll behind us, we should have an opportunity for volume to pick up. I know Mondays aren't the most likely days, but it may be that Monday does pick up a bit in volume. Tuesday we've got some key data, and then the two-day Fed meeting begins. So Wednesday might be a little slow until that Fed announcement. But keep in mind, this is triple options, options futures, and commodity expiration this Friday, and that means that they're going to unravel all that stuff. That usually leads to a move. They'll probably save it for after the Fed, so either probably Thursday. So Thursday, I would think, is going to be the more exciting trading day of the week. Maybe we get something going Monday just because we're trying to confirm this downtrend. Tuesday could be all right as well. Wednesday is going to be a little light, probably with the Fed. Friday is going to be slower than molasses, because it always is on triple expiration. Here's a look at the data coming out this week. Monday, Empire Manufacturing and the NAHB Housing Market Index, not very important, either one of them. Tuesday, CPI is a big number, housing starts and building permits. Wednesday, that crude oil inventories, mortgage index, and the Fed rate announcement. Thursday, initial and continuing jobless claims, existing home sales, Philly Fed leading indicators, and natty gas. No data at all on Friday for that triple expiration. So we're excited about this. If we do start to get some acceleration to the downside, it should give us some real nice opportunities. We had a real nice day on Wednesday trading the short side of the market on that acceleration to the downside. And so we probably get more days like that to come if this starts to roll. And that's nice because it really shows off the difference. When we get in these ruts where we're just making money on the long side over and over again, it really shows off the difference for traders when we can make it on the short side just as easily and make money both ways in the market. We will be in the Trading Lab as usual. If you have not taken a trial of our services or eSignal 11, you can do so. Contact us for details. And also this weekend we're running a special on our futures course, 33% off. You can contact us through the website at tradesight.com. Have a great weekend and a great trading week.